On Nvidia, though, to shift gears here and look at a name that's actually moving positive in a sea of red, especially for the tech names. Actually, this is our only tech name that's currently still in green territory, modestly so. Nvidia is up 0.6%, our third best performer in the S&P 500 to close out this year. Walk us through what you're seeing here with Nvidia.
Not surprising. We've seen this trade over the last month or so when a lot of the Mag 7 names were hitting all-time highs, and Nvidia still down 10% off its all-time highs from the end of November. So it's still in correction territory at this point, but now we're seeing a little bit of pullback in a lot of those Mag 7 names, and Nvidia getting a little bit of a boost. I think one of the catalysts, and maybe why, we're seeing some unusual option activity in there on the call side in Nvidia also, is January 6th at the CES conference in Vegas that Jensen Huang is going to give a keynote address. January 6th. Mark that down in your calendars as a potential big catalyst for Nvidia. Jensen Huang's usually pretty upbeat and talking about demand for the Blackwell chip and then their Hopper chips also, which are basically sold out at this point. What will he say? What type of demand will we see? Because we have seen that pullback from all-time highs. The stock's still up 178% this year, Jenny, so it's had a good run, even though it's off 10% from those highs that we saw. Also, some news today that ByteDance, they were going to try to buy up to $7 billion worth of NVIDIA chips outside of China. Remember, there's those restrictions that these Chinese companies cannot buy the high-end NVIDIA chips. So that was maybe a positive causing the stock to go up here a little bit.
Wedbush analysts recently forecast a 25% increase in tech equities by 2025, demonstrating how the AI revolution is still changing the industry sector. Nvidia and Microsoft will lead this rise. Among the other companies on Wedbush's list of the top 10 AI-driven winners are Tesla, Alphabet, Apple, and Palantir Technologies. Wedbush predicts that the corporate use of large language models, LLMs, and the adoption of generative AI will drive over $2 trillion in additional AI capital expenditures in the coming years. Daniel Ives and other analysts predict that the fourth industrial revolution will present software and hardware companies with enormous growth prospects. With its impact on data centers and GPUs, Nvidia continues to lead the AI darling market. In order to help businesses grow AI solutions, the company expects big contributions from cloud heavyweights like Microsoft Azure, Google Cloud, and Amazon Web Services. Wedbush predicts a huge demand for AI-integrated platforms across industries and names Salesforce and Palantir as the leading software companies involved in this AI wave. Nvidia, a semiconductor powerhouse, had a fantastic 2024, but a closer examination of its most recent stock price chart indicates that it is starting the new year on unsteady footing due to concerns about the company's capacity to sustain its remarkable rate of development. More precisely, since the company's fiscal 2025 third quarter results were announced on November 20, 2024, Nvidia's stock has dropped more than 6%. Investors appear worried about the possible pressure on Nvidia's margins due to the ramp-up of its Blackwell artificial intelligence, AI, processors, and the slowdown in its top-line growth, even though the chipmaker's revenue and earnings last quarter surpassed expectations and its guidance above expectations. Nevertheless, astute investors would be wise to ignore these worries because Nvidia may be able to recover its momentum in 2025 thanks to a significant catalyst. Nvidia may ship over 6 million data center graphics processing units, GPUs, in 2025, according to a number of forecasts from investment banking and financial services firm Jefferies, which would help the chipmaker profit between $180 billion and $200 billion. Additionally, compared to the buy-side projection of $205 billion to $215 billion, Jefferies' forecast is more conservative. For example, Morgan Stanley projects that Nvidia will make $210 billion in 2025 from the sale of its Blackwell systems alone, suggesting that the company's total data center revenue may be even greater. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
That takes advantage of capturing that CES keynote that Jensen Huang is going to deliver. I went out to the January 10th month or weekly cycle. That's about 11 days to expiration. You're going to capture that talk from Jensen Huang, where I'm going to buy something, but offset some of my costs. It's a bullish trade, but it's a vertical. I'm not buying just a straight call. I'm buying a vertical to offset some of my costs and risk on this bullish trade. January 10th, buy the 137 strike call. It's basically at the money. It's got the higher delta. It reacts more like the stock. And then against it, sell the 147 call. So a bullish $10 wide call vertical to the upside that takes advantage of a move higher. If you pay on this $10 wide bullish call vertical, you paid about a $3.80 debit. There's your risk, $380. That can expand to $10 if the stock goes above 147 over the next week and a half here. Your break even on this one where you start profiting at expiration, $140.80. That's only about 2% above the current share price. So you don't need a monster move to the upside. Now, why not just buy the 137 strike call it a bullish trade? Well, you're going to pay more for it, right? You're offsetting some of your initial risks on this with the expectation that, hey, it can go up. I just don't think it's going to go up maybe more than 147 over the next 11 days. This is really short-term positioning, but you're taking advantage of that potential catalyst to the upside here in Nvidia if you think this thing's going to rally after Jensen Huang speaks. And remember, this has been the underperformer in the Mag 7 over the last month. If it starts to perform well, the market goes up, Nvidia is probably going to participate there, and you can take advantage of that.
Taking into account that in 2025, the business will still sell Hopper processors from the previous generation. However, it would still be a significant improvement above its projected data center revenue for 2024, even if Nvidia were to generate at least $180 billion in data center GPU revenue in 2025. Nvidia made $79.6 billion from its data centers in the first 9 months of fiscal 2025. However, sales of Nvidia's networking chips for data centers are also included in this statistic. In the first 3 quarters of fiscal 2025, Nvidia sold $69.6 billion worth of data center GPUs, with the remaining $10 billion coming from sales of its networking solutions. In the first 9 months of the fiscal year, Nvidia made $91 billion, of which 76% came from data center GPUs alone. The fourth quarter of fiscal 2025, which ends in January 2025, is expected to generate $37.5 billion in revenue, according to company guidance. Nvidia's income from sales of data center GPUs might reach $28 billion if these chips contribute 75% of total revenue in fiscal Q4. Nvidia is expected to complete fiscal 2025, which corresponds with 11 months of calendar 2024. With $97.6 billion in data center GPU revenue for the year. When that amount is added to the data center revenue it has made in the first 9 months. Nvidia's data center GPU sales may increase by at least 84% in fiscal 2026, which would cover most of calendar 2025, according to Jefferies' forecast. The $180 billion projection from Jefferies is predicated on the assumption that each data center GPU sold by Nvidia sells for an average of $30,000. Given that the business anticipates charging between $30,000 and $40,000 for their Blackwell processors, this is hardly shocking. That pricing range, however, also indicates that there is a demand for a higher average selling price, which would enable Nvidia to produce more money from data center GPUs in 2025. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
And one of the movers, of course, that's not just a mover of the day, it's a mover of the year, is Nvidia. The latest news with Nvidia today, it's completing its acquisition of an Israeli AI firm called Run AI. Watching this here, the company apparently, it has software that helps owners of intelligence computing gear get the best out of their hardware. That was how the Bloomberg report.
It helps you use your chips better and smarter, right? Is sort of how I was reading it, which to me fits into a little bit of part of the Nvidia narrative that we've been talking about over the last week or two, right? It was, I think maybe a week ago now, I was on with Madison Mills and we were talking about Nvidia's playing cloud, right? And trying to build out cloud. And this is also, okay, I bought an Nvidia product. What do I do with it? How do I use it more efficiently? And it's a smart play for Nvidia when you think about just the growth of the company, right? You sell all these people these products, how are you going to keep making money off them and sort of continue to grow top line if it's not selling chips? Maybe it's the services aspect, right?
Well, it's been, I mean, the integration of software and hardware has been one of Nvidia's innovations as a chip maker, right? The other chip makers haven't necessarily done that to the same degree of success. What's interesting here is that it sounds like Run AI is also potentially going to provide services for other hardware systems, not just NVIDIA's. So just another, I mean, I know you watch NVIDIA closely, very closely, Steve.
You can't not.
Right. And so how are you thinking about it as we go into 2025? And there's this relentless push from NVIDIA and its cohort to come up with what's next.
Well, that's really the key. I mean, you know, if you think of AI as the gold rush, and, you know, these are the ultimate pick and shovel. NVIDIA is the manufacturers of pick and shovels for the AI gold rush. And, you know, to the extent that this makes their products more saleable, more useful, provides a longer revenue stream, it makes a lot of sense for all the points that Josh raised. But, you know, to me, NVIDIA is going to remain, at least for early 2025, the stock to watch. And I think, you know, as I brought up in the earlier segment, Earnings expectations are very high for the S&P 500. Well, the S&P 500 is a top-heavy index, and NVIDIA is among the things making it top-heavy. And the one interesting thing is shortly after the inauguration, we launch into earnings season. That's when we start to hear the guidance from basically most companies, and all the big cap tech companies, with one big exception, NVIDIA, which is a month later.
Yeah.
And so to me, it's going to be very crucial that NVIDIA can maintain the type of earnings growth that's priced into it. There's a lot of good news priced into this stock. Doesn't mean I'm not going to say they can't do it, but they have to keep this going at a very, very rapid pace to maintain the stock price and maintain the momentum that.
Other projections, meanwhile, suggest that NVIDIA's data center GPU shipments would increase in the upcoming year. NVIDIA may therefore produce higher than anticipated data center GPU revenue in the upcoming fiscal year. Furthermore, according to Jefferies' prediction, NVIDIA may produce an extra $82.4 billion in data center GPU revenue the following year, which is determined by subtracting the projected revenue of $97.6 billion from $180 billion for fiscal 2025. NVIDIA's top line could reach $211 billion in fiscal 2026 if its other companies stay the same. This figure is calculated by adding $82.4 billion to the company's projected $128.5 billion in revenue for fiscal 2025. It may be on course to surpass the average revenue forecast of $195 billion for fiscal 2026, though since the company has been seeing growth in all of its major end markets. Based on the discussion above, it appears like NVIDIA will continue to grow at an impressive rate in 2025, possibly surpassing the predictions of analysts. Because of this, astute investors would be wise to purchase this AI company while it is still trading at a competitive 32 times forward earnings, which is less than the earnings multiple of 33 for the Nasdaq 100 index, which is a stand-in for tech firms. Additionally, NVIDIA has a price/earnings to growth ratio, PAG, of 0.98. A PAG ratio of less than 1 indicates that a stock is cheap given its potential for profits growth, which might be more than anticipated in 2025 and help shares soar once more after the recent lagging. This is another indication that NVIDIA is worth purchasing at this time. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.